Good morning, everyone. My name is Adam Livingston, and I am the Bitcoin Wizard. I'm going to be talking about my thesis behind the Bitcoin treasury companies today, specifically Mstr and Metaplanet. We're just currently in a period of very negative sentiment right now, and you see that reflected online, and I'm coming to the conclusion that it's because a lot of people are holding these equities, but for different reasons. For example, you can see shareholders of strategy like me. I own Mstr. I see other people, and we are at a fundamental disagreement about what the big picture is. And I do think a lot of it is time horizon. For example, if you're 63 years old and you have a bunch of money in Mstr and you saw Saylor buy 400,000 Bitcoin and therefore you see deleveraging, I can see why you would be a bit upset. But for me, I'm a younger guy and I see the opportunity with digital credit accessing trillions of dollars of capital to flow into Bitcoin, and I realize that I have the time to wait for that. And a lot of other people don't. So when you see the negative sentiment out there, just remember that people are buying these things for different reasons, and just because you both own the same equity, that doesn't mean that you both think the same. I continue to see these complaints about the deleveraging and about why it's not outperforming Bitcoin on this year time horizon, but that doesn't invalidate my thesis behind the entire thing, and so I'm going to talk about my thesis today. A couple quick announcements. Today at 4 p.m. Central Time, I will be on Strategy's earnings call. I'll be taking part of the Q&A session that starts at 5 p.m. Central Time, and they have specifically asked for a tough question, not a softball. I am pretty sure I know what I'm going to ask already. However, who knows? Somebody might ask my question before I do. So if you have any ideas on what you want to get out of strategy management, please leave a comment below. Additionally, me and my good friend Adrian Morris from True North will be doing a live stream at 2 p.m. Central Time on Saturday. We are going to be covering two very fun topics, mNAV as well as the ATM on Mstr. Adrian's done a lot of amazing research to show how the ATM has actually influenced the stock price, and I will be talking a lot about mNAV. So tune into that on Saturday if you want more content from the Bitcoin Wizard. So during this presentation, I will be getting into some first principles a little bit at the start, but then I will be getting into my own personal opinions about Metaplanet and strategy. And before we get started, a very special thank you to Horizon for sponsoring this video. Horizon helps you tap your home equity to buy Bitcoin. And you get to buy Bitcoin using your own home equity without debt, monthly payments, or term limits. The Bitcoin is fully yours to hold however you want, with no risk of forced liquidation. I will talk more about them at the end of the video. By now, we all know that there is definitely a subset of Bitcoiners that are very anti-Bitcoin treasury company, and I am not one of those people. There are three paths to Bitcoin exposure, and those people would fall under the left, the direct Bitcoin ownership. Now, to be clear, I own a lot of cold storage Bitcoin. I think it is the apex asset. Of course that I own it. It has the benefits that I talk about every day. Total sovereignty over your money. You get to self-custody it. There is zero counterparty risk. It has the highest form of financial freedom, but it does require a lot of personal responsibility, which, in my opinion, is a great thing. However, I do think it's not for everybody. I wouldn't trust Grandma Bertha at 88 years old to memorize her private keys. And that's maybe where the Bitcoin ETFs come in for some people. That offers you spot Bitcoin performance through something like IBIT from BlackRock. We all know that these prioritize convenience and liquidity over the sovereignty that you own with Bitcoin, so investors receive price exposure only, but they don't have a direct claim on the underlying Bitcoin. So we know that the investors receive the price exposure only, and they're not actually custodying the Bitcoin. That's great if you want Bitcoin performance in your retirement account. I totally get it. That is a different use case. And then all the negativity lately has been around the Bitcoin treasury companies. Negativity obviously following some pretty negative price action, so totally makes sense. When you own equity in a Bitcoin treasury company, you are getting indirect exposure through Bitcoin through that equity ownership. Equity is a non-redeemable claim on a company's Bitcoin balance sheet. I see a lot of people say, why would I buy the shares if I can't just redeem it for Bitcoin? But the reality is, if you own equity in anything, you cannot redeem the equity for the assets of the company. That's not a thing. That's the point of equity. I see that complaint a lot more than you would think. People want to be able to redeem shares for Bitcoin. And if you're not comfortable holding equity, just go buy Bitcoin. And the entire thesis behind investing in a Bitcoin treasury company is the fact that you can outperform Bitcoin. Bitcoin is the hurdle rate. The trade-off is there is a lot higher volatility with these things, and you get the less sovereignty. You don't get to custody the Bitcoin yourself. And underpinning the entire investment thesis behind putting your capital capital in equity in a Bitcoin treasury company is the hurdle rate. Bitcoin sets the benchmark for returns, which means that if an investment cannot outperform Bitcoin, capital will flow back to Bitcoin itself. And so the goal for owning MSTR, Metaplanet, Smarter Web Company, it is very simple. You need to beat Bitcoin's performance in Bitcoin terms. And I will be talking about the difference between the fiat terms versus the Bitcoin terms and how that also underpins my investing thesis. But anyway, the fundamental principle behind the hurdle rate, it is driving the entire strategy here, the entire capital allocation strategy. And I think that this is going to continue to be accepted. If you're a CFO of a major company and you are just in charge of allocating huge amounts of capital, you need to start justifying to yourself, why would I allocate capital anywhere else besides Bitcoin? And this is straight from Strategy's website. This is the return of the MSTR common equity versus all these other assets. And as you can see, not only does MSTR outperform Bitcoin and Nvidia, but outperforms Tesla, Google, Meta, Microsoft. So the entire Mag 7, IBIT, Apple, QQQ, the NASDAQ 100 itself. So the point is, there is historical precedence for Bitcoin treasury companies to greatly outperform Bitcoin. And it's not just Strategy, but Metaplanet has done it as well. But remember, this is the fiat returns, not the Bitcoin terms. And I'm going to talk about the difference soon. A couple more slides here just to re-explain some first principles, because I know that a lot of people have been asking for more explanation. If you already know what mNAV is, go ahead and skip ahead. But I think understanding mNAV is very important because it measures how the market is valuing a Bitcoin company relative to the worth of its Bitcoin holdings. And the best way that I can think of explaining it is comparing it to IBIT, which is BlackRock's ETF. Remember, if you give BlackRock $1, you get $1 of Bitcoin exposure forever. You don't get a premium, so there is no potential for compounding exposure. And we've seen with Bitcoin treasury companies that some of them actually trade under the value of their Bitcoin holdings, some of them trade about equal, and some of them often trade above. What we've seen from the historical precedent is that mNAV tends to oscillate. It goes up in positive sentiment, it goes down when it's negative. And that's because, in my opinion, mNAV is sentiment, but we're going to be talking a lot more about this on that Saturday live stream with Adrian. But the way that I think about it from first principles, if I put my Austrian economics hat on, price is something that is emergent from an uncountable number of variables because it's millions of transactions, right? And each transaction is a transaction between two individuals. And both of those individuals have different valuation methods. Both of them think that they're getting the better end of the trade. And the marketplace is made up of hundreds of thousands, if not millions and billions of these independent transactions. This is why mNAV isn't a lever that Michael Saylor has in his house. It is the valuation. The price times the amount of outstanding shares is the numerator in the equation. And obviously, if you include the debt, that's how you get the enterprise value part of the numerator. So if the numerator is the price times the amount of the outstanding shares, to me, that is the gauge of sentiment, because the price, the overall price in all of the marketplace amongst all of those transactions, that to me means that it is a sentiment gauge. There's obviously some disagreement in the space, but that's what I think. Let me know what you think. Now, when it comes to how Bitcoin treasury companies beat Bitcoin's performance, well, number one, you can issue equity at a premium. When a company is trading at an mNAV that is above 1, they issue more shares to buy Bitcoin. And what that does is that increases your Bitcoin per share. Remember, if you're buying IBIT, buying BlackRock's ETF, you make a transaction and your $1 will get you that $1 of Bitcoin exposure. But if MSTR, for example, then issues equity at a premium, well, that means your Bitcoin per share, the Bitcoin exposure that is embedded in that same share, that can go up over time. That's why with an ETF, there is no potential for compounding exposure. So when Strategy issues stock above the NAV, they buy more Bitcoin. All existing shareholders gain the embedded Bitcoin leverage. And then you have all the shareholders saying that Bitcoin per share doesn't matter, but it totally does because that is what they own. That is the value on the balance sheet. So it definitely matters to some degree. Now, what I just explained is that the markets, the broader market at large, filled with those millions of people, obviously, they can perceive that differently, which would play into the overall stock price because it's sentiment. But the reality is that if MSTR didn't own any Bitcoin at all, it would not be valued like it is. So obviously, the amount of Bitcoin exposure that you get per share definitely matters. This is just undebatable. And then as a result of this entire process, there is the capital markets flywheel. flywheel. This is where the reflexivity comes in, and this breaks a lot of people's brains. It has broken a lot of people's brains on the way down a lot worse than the way up, because if the valuation of the company influences the strategy, a lot of people don't want to be holding the bag on the way down. And that's why you get the amplified volatility behind these Bitcoin treasury companies, because you see really extended levels of sell-offs, in my opinion. But the flywheel is simply there's going to be a rising share price when sentiment is running hot. That means they can raise more equity. That means more Bitcoin bought. That means rising Bitcoin per share. And if the market perceives that to be a good thing, that's when you're going to get a higher mNAV. And we saw that with strategy last year, November of 2024. And also part of the run up to the all-time high last year, which has almost been a year ago, crazy how fast time flies, the embedded leverage was a huge part of that run up, because last year at the time, 25% of strategy's balance sheet was convertible debt, and now it is about 10%. So a lot of people talk about these treasury companies like trading below the value of your net asset value, like a below 1 mNAV, as some death sentence, but the reality is that the arbitrage between access to cheap debt and Bitcoin's long-term compound annual growth rate, that's going to exist for a very long time. And remember, the predominant thesis for investing in MSTR has changed a lot over a very short amount of time. Nobody was thinking about digital credit a year ago. BTC yield and Bitcoin per share wasn't even expressed as a thing before last year either. For me, the reason why I bought into MSTR was realizing, wow, this guy can get debt at 0% and buy Bitcoin with it. Why would I not want to have a piece of that pie? So anyway, the point that I want to make is that markets have historically rewarded these structures with multiples. And the result has been there has been outsized returns to equity holders compared to Bitcoin itself. This is just demonstrable reality. If your time horizon is a few months, I don't know what to tell you. I wouldn't even call myself an investor at that point. So now we're going to get into the nitty gritty why I still love Metaplanet, still love strategy, etc. This is Metaplanet as an example here. At the start of their Bitcoin treasury strategy last April 2024, they had 46 sats per share. That was your Bitcoin exposure. Every single share that you owned of Metaplanet common equity had 46 sats of exposure. And then 18 months later, in October of this year, each one of those shares now has 2,146 sats per share. So in Bitcoin terms, you now have a 46x increase in Bitcoin exposure in 18 months. I think that we all wish we could go back in time and buy Metaplanet stock in April of 24, but then again, there would have had to be enough people to sell it to us. Remember, there's two sides to every trade. There's always going to be a winner and a loser. There are bad entries on things depending on your time horizon, of course. But this is what I mean by being up in Bitcoin terms, okay? The negative sentiment is really bad because the price in fiat has gone down dramatically. Metaplanet was at an all-time high back in May, $15.64. $15.64 was the share price. We've gone down to $3. We've round-tripped, at least I did. I bought around $3. I'll be honest, that was my initial position. I made a huge position at $3. So now I've done a round trip in fiat price, but now my shares have embedded so much more Bitcoin exposure, and obviously the convexity is going to show up when Bitcoin goes up. And we've been chopping sideways for a long time. So when Bitcoin is $500,000 or $1 million or 250,000, I am going to get a return on that investment because my shares have more embedded Bitcoin exposure. And obviously the mNAV, the premium, can obviously oscillate for an infinite amount of reasons as well. But I try not to think about that. Yes, it sucks that the valuation obviously influences the efficiency, but as long as I see catalysts on the horizon as to how the company can continue to get more Bitcoin into my shares I already own, I'm totally fine with holding it, and nothing has disproven that thesis. This is a chart from strategytracker.com. Again, shout out to Strategy Tracker, an amazing resource if you guys want to dive into these metrics yourself. This is Metaplanet's mNAV, the multiple of their net asset value that they've been trading at since they started their Bitcoin treasury strategy in April. And as you can see, mNAV has really never been a static metric. It's been all over the place. It went up past 20 in looks like July of last year. The sentiment behind the stock oscillates, and I believe it's reflective in this metric. So to demonstrate how I got that Bitcoin exposure, when I bought those shares of Metaplanet in April of this year, The stock price was at $3, but I bought at a 3x mNAV. Now today, about 6 months later, the stock price in fiat terms is the exact same. However, now it's trading at a 1x mNAV versus the 3 back when I bought it. And that's because the company just has more Bitcoin and I have more Bitcoin exposure. And this slide tells you exactly what I'm talking about here, because remember, the premium was harvested by the company by issuing equity over the 6 months. Metaplanet did exactly what I wanted them to do. I wanted them to dilute the stock because my Bitcoin exposure goes up. That is my thesis, and they did exactly that. So why would I sell my shares after they did what I want them to do? So looking at the fiat prices all-time high on May 24th, 2025, there were 943 sats per share exposure. 6 months later, now each share represents more than double the amount of sats. Just like that, more than double since the all-time high. And that convexity is going to show up when Bitcoin goes to $1 million. And the reality is that Metaplanet is extremely underleveraged right now, and therefore the market's not rewarding them a premium because it's trading like it's spot Bitcoin, like it's a Bitcoin ETF. And to get more specific, Metaplanet's Bitcoin value covers their debt 142 times. If you look at the chart right here, the white line is really representing the debt outstanding. This orange line is the Bitcoin net asset value. And right here, the mNAV is a 1, which is demonstrating that the market is not rewarding it a premium because they don't have any debt to be leveraged. People want a leveraged Bitcoin proxy if they're going to buy a Bitcoin treasury company. And in my opinion, the fact that it's trading at a 1x mNAV right now is totally ridiculous. I think that the efficient market hypothesis is totally incorrect, and Bitcoin itself, but really Bitcoin treasury companies, have just put the final nails in the coffin of the efficient market hypothesis. Because right now, you just saw that the stock is trading like it's a Bitcoin ETF. It's ignoring ever their ability to increase Bitcoin exposure. It's assuming that they can never get out more intelligent leverage, or they could not execute to get more Bitcoin per share ever again. The market is pricing in a 0% ability to ever do that. That's what that multiple tells me. And on top of that, it's ignoring the fact that they also have a profitable operating business right here. They just made $16.5 million in Q3 of 2025 using their Bitcoin put underwriting system. They're also building Japan's premier Bitcoin education site with Bitcoin.jp, and they're working on Project Nova, which is going to be quite interesting. And the market isn't pricing in this at all. That's at least my opinion. Now, there's different schools of thought. Some people continue to think that the market at large is just treating Bitcoin as a total liability, which to me just tells me how early that we are, the fact that people think that the Bitcoin is the liability. For example, Sequans is a company with a profitable operating business, yet because their treasury is in Bitcoin, the market is valuing the entire company at less than the assets that it owns, which to me doesn't make any sense at all. But remember, I'm just some guy and this is my opinion. So this is not financial advice. This is financial entertainment. I just think the market's totally irrational. I'm just one guy, whatever. Maybe it's because I understand Bitcoin better than most people. And really quickly, a cool video just to show your Bitcoin ownership going up over time. This is Metaplanet each month since April 2024 when they started their Bitcoin treasury strategy. And each month on the x-axis here represents the sats per share increase going up over time. This is why I like investing in Bitcoin treasury companies, because my Bitcoin exposure just goes up over time. And this is where I get really frustrated, because it seems like the market is pricing in absolutely zero potential for the Metaplanet prefs, which is obviously the Japanese equivalent of the strategy ones, which in my opinion is the most revolutionary instrument in the history of finance, digital credit. If you look at strategy stretch right here, it's paying a 10.4% effective yield backed by Bitcoin, which is 2.5 times what you would get from a US Treasury. So why wouldn't this catch on? In my opinion, I am a believer that the best product will always win in the marketplace. I continue to see these bear cases like, what if the market doesn't catch on? Well, Strategy's issued $6.5 billion worth of these things already. $6.5 billion in year one. The year's not even over yet, and we're just getting started in this brand new paradigm. $6.5 billion isn't nothing. And Metaplanet, in my opinion, represents an even better opportunity than Strategy for this exact same thing. It's a more yield-starved capital market. They don't even have to issue as high as a dividend to capture the spread between Bitcoin's compound annual growth rate and the interest that they will be paying out. And the cool thing about the preferreds, you get a Bitcoin per share increase in the because preferred share issuance means that your Bitcoin per share goes up regardless of the mNAV. They have this nice little table here saying a 6% dividend yield with a 30% Bitcoin ARR every single year, the annualized rate of return. It's like issuing equity at an 8.6x mNAV, which is obviously crazy beneficial to the common equity shareholders. Now, there is a giant, huge question right now over how the Bitcoin per share is going to count for the common shareholders versus the preferred shareholders. Now, in my humble opinion, I think there is enough out there to show the fact that people do not care or they do not know. Because of the reasons I just listed prior, people are not valuing this rationally. People do not understand the strategy preferreds, let alone the Metaplanet ones. I think right now, a lot of people have just seen the decrease in the fiat price and they're trying to explain it, and I think that they are overly explaining it. I don't think the market in the slightest is wondering about how much the Strife Bitcoin exposure is versus the common. I don't think the people buying these things are even coming close to thinking of this. Yeah, maybe some of them are, 1% of the people. I don't know. I just don't think that these things are being valued. I think that risk is mispriced and the market is inefficient. That's just my opinion. But right here, when you can take people's money, buy Bitcoin with it, give them a 6% fixed income, paid monthly, which would be 5.8% higher than what the Japanese would get in their savings accounts, and then you capture the spread between the 6% and a 30% Bitcoin CAGR, that's the best business model in the world. I would do that every time. And they have a clean balance sheet. Remember, their Bitcoin NAV covers their debt 142 times. It's perfectly clean to where they can start issuing these things. And remember, even if a 1x mNAV is the floor forever, you still get Bitcoin level returns on your invested capital. And that is the hurdle rate. I would totally be fine with Bitcoin-like returns. We're all still gonna be rich, fellas. And then people do make the point, but Adam, what if it trades below NAV, which it has before with some companies, but Metaplanet just announced a share buyback program, which means that if the stock is ever trading below the value of their Bitcoin holdings, they can then buy back shares, which just increases your Bitcoin exposure, which would be a deterrent to short sellers from ever short selling below that mNAV. So now it's like they have some defense to set a 1x mNAV floor. I'm not saying that it will trade like that forever, but the fact is they have that optionality and the short sellers need to keep that in mind. It's like they're kind of playing with fire. So this is my current thesis. I'm going to make it as clear as possible. This is my opinion. If the new share buyback program deters shorts and the traders, pushing the price below the 1 mNAV, then mNAV would be a 1.0. That would be the floor, so to speak. That means if I buy a Metaplanet at a 1 mNAV today, I could get Bitcoin equivalent returns in perpetuity, along with the possibility of the future Bitcoin yield, the future Bitcoin exposure being embedded into my shares, and the future leverage opportunities, and also the markets valuing their positive cash flows. If they have positive operating businesses, why is the market not pricing in the value of those businesses at all? It's trading just at the value of their holdings. To me, there is such an obvious mispricing here, and I keep going back to the drawing board. Adam, I'm freaking out. The stock price in fiat's going down. Yeah, it sucks because it influences their efficiency, but I still think there is a huge mispricing, and I sleep like a baby because I don't think I'm wrong. This is just the reality. This is where Metaplanet started in April of 2024, and they have greatly outperformed Bitcoin ever since they started this strategy. And in the past few months, absolutely, they have went down. You can see it right here. This is the line going down versus Bitcoin being flat. But I don't think there is historical precedent to say that will go down forever when historical precedent tells me that that will not be the case. You can see the outperformance. I just think that people will probably continue to love me on the way up and just hate me on the way down, which is what I'm fully equipped to deal with. I literally don't care what other people's opinions are because my thesis is my thesis. And I keep going back to the drawing board, and I don't think it's incorrect. Bitcoin has returned 62.46%, and Metaplanet has returned 3,389%, which is huge outperformance. Now, obviously, the fact that they are a bigger company means that the BTC yield is a lot harder to achieve because they are bigger, but they're still just a fraction of what strategy is. So I think that there is a whole lot of positive runway for this stock. I'm prepared to hold it for a number of years. I don't care if it goes down on a few month time horizon. I really don't at all. They have a plan, and they're going to stick to it. I love this company. But do whatever you want with your own money. So bringing it all back to the thesis, the sovereignty trade-off of putting your capital in one of these equities rather than just buying Bitcoin. You are trading your Bitcoin sovereignty for exponential upside potential. You could use this strategy to end up getting more Bitcoin. That's totally possible. And in fact, I've kind of been doing that. So properly managed, that means a Bitcoin treasury can act as a leveraged sovereign proxy, which is a beautiful thing. And I do think that there is a reward that is suitable for some investors. Not everybody can hold this thing. Not everybody can handle the volatility. That's been very clear, obviously. Some people are freaking out online. But this is a strategy where history says you can outperform the Bitcoin hurdle rate without managing private keys or liquidity events. There is added volatility versus spot BTC. The mNAV can swing dramatically. Leverage magnifies both gains and drawdowns 100%. And I think that the fiat-denominated investors are going to struggle with this psychologically. And I really think that if you're thinking in Bitcoin terms, in Bitcoin per share terms, this will help you clarify long-term performance. But at the end of the day, if you don't have conviction in Bitcoin, you're not going to make it in this trade. My name is Adam Livingston. I am the Bitcoin Wizard. I really hope that you like this presentation. I will see you on Strategy's earnings call very shortly, hopefully, if you're watching this the same day, of course. And please join me and Adrian Morris on Saturday the 1st at 2 p.m. Central for a fun live stream on mNAV and Mstr ATM. Have a terrific day. Do not party too hard. Class dismissed.
Once again, a special thanks to Horizon for sponsoring this video. Most people don't realize this, but on average, 60% of American homeowners' net worth is locked up in their primary residence. And with home prices more inflated than ever, Americans now sit on a combined $35 trillion in home equity. Now there's a way to unlock that trapped capital and put it to work in Bitcoin. Horizon helps homeowners unlock a portion of their home equity to buy Bitcoin. It is not a loan, so there are no new monthly payments. You keep living in your home as usual, and then later when you sell, refinance, or choose to settle early, Horizon's provider takes an agreed share of your home's future value. That is the trade. Unlock cash now to stack Bitcoin by selling a slice of your home's future value while you continue living in it. What makes Horizon stand out is that there are no term limits and you keep 100% of the Bitcoin upside. The Bitcoin is fully yours to custody however you want, wherever you want, with no risk of forced liquidation. If you've been sitting on a pile of home equity and are eager to invest in Bitcoin, this may be the product for you. Visit joinhorizon.com to see if you qualify and get started. Their team of experts will work with you one-on-one from start to finish. Transform your dormant home equity into Bitcoin today with Horizon.